Hi guys, it's Brogan Law. I'm here to help you with your commercial awareness this week. I'm sorry I wasn't here last week. I had COVID. I promised myself I would be consistent with actually uploading anything to YouTube, and I failed at the first hurdle. But in my defense, I had coronavirus, and any of you that's had it knows that it's an absolute ball buster. So yeah, I've been in bed pretty much the whole time. We've also had a heat wave. So 35-degree heat was really lovely whilst coughing my guts up. Okay, so the first thing that we're going to be discussing is the business world. We're going to be talking about Google. Basically, Google had an $160 million fine in India. They were disputing it and the Supreme Court has upheld it. They had something similar recently with Europe. That was a $5 billion fine, and it was all because of breaches of competition law. So competition law is about promoting competition within a marketplace. Now, until recently, I didn't really understand what different markets were. They're basically invented. They're not physically there. It's just that every company operates in certain markets. So for example, Google could be said to work in the technology market or the search engine market if you wanted to be narrower. So why is competition important? Well, competition is important because as consumers, we want to make sure that the businesses that we're buying from or using the services of are the best as possible. If there's only one company, then essentially we have to take what we can get, and that is not a good position for customers to be in. So if you think back in the day with the mafia, they used to reduce competition by fear. They loved a good violent method, shall we say. The result of that was that it scared people into setting up companies in the same market as them. If you haven't watched Bad Sport on Netflix, watch it, because there's a couple of really good examples in there. It also really helps smaller companies to enter a really saturated market. So for example, Google, who we're talking about now, they are a huge search engine. Imagine if me and you tried to set up a search engine company. It would be pretty difficult. So competition laws help me to break into that market space. But overall, the main benefit is for the consumer. So one of the really important things when it comes to competition law, and particularly clients of law firm, is if they are considered a dominant company. So what this means is they operate in a market space where they are one of the key players. So in law, there's a couple of elements which are really important. So one, what market space they operate in, and two, what percentage of that market space that they take up. So like we said earlier with Google, if they operate in a market space and the courts decide that the market space is technology, or they decide that the market space is smartphones, they will then decide what percentage of that marketplace that they take up. Now in India, 95% of the population had Android phones. Android is owned by Google. And what Android was doing is it was stopping users of the Android phone being able to put any other search engine as their default browser. So one of the effects of that is that other companies like Bing or Yahoo, they weren't able to use their browser as a default setting on the customer's phone. So that had a significant disadvantage for all of those companies. So $160 million might seem like a hefty fine for a company for simply not allowing other companies to be the default browser on a customer's phone. But the reality is they get millions, if not billions of pounds just from that small feature. And $160 million is actually not a huge fine for someone like Google. $5 billion is probably more arguable. So why is this important for law firms? Well, this is particularly important if you're going into one of the bigger international law firms who are likely going to be working with clients who are considered dominant brands or dominant companies. If you're working for smaller firms, it's unlikely that competition law will be an issue, particularly because they're unlikely to be dominant, and actually if they're a smaller client, then they're more likely to get benefits rather than disadvantages from competition law. And also, if you're working for a law firm, are they considered a dominant in their marketplace? You really have to think about them also abiding by competition law themselves. So with this one, just remember, Google have a history of not being great under competition law, and the reasons why competition law are important. So the next one we're talking about is for all the finance lovers, and we're talking again about Credit Suisse. Now last week I explained what was going on with Credit Suisse, and if you haven't listened to that, you can listen to it here. And essentially what we're doing is we're just going to be going over some of the changes that have been happening, some of the updates, and also whether or not there's a banking crisis in the UK at the moment. Okay, so UBS has bought out Credit Suisse. Now, the reason this is a huge deal is because they've actually bought them out to save Credit Suisse as a bank. UBS was one of the biggest competitors of Credit Suisse. They both operate in Switzerland, so I would imagine they got quite a good deal there. So for those of you who are not familiar with buyouts and how companies work, companies are often buying each other, merging, hence the term mergers and acquisitions. Businesses like to buy companies to expand their own. So what UBS will have done is they paid an amount, I think it was around $3.25 billion, which I know that sounds a lot of money, but it was probably a really good deal for what they were getting. And they've now taken on that business. They've taken on the employees, they've taken on the clients, they've taken on the systems. Obviously the details of it is confidential, so we don't know exactly what they've bought and exactly what they haven't. But it will enable UBS to now be the biggest player in Switzerland if they weren't already before. UBS have also appointed a new CEO, Sergio Ermotti, who used to work at UBS. So I always wondered, why is it important to know who the CEO is? But I guess it's kind of like a political leader. This is all about confidence. We don't want people feeling that their money isn't safe in banks, because then they will take out deposits and there might not be enough money in the banks if a mass of people all go to take their money out at the same time. So his appointment has been really praised by a lot of people in the financial and banking world. So that's a good sign, because it means that they've gone with someone who's going to fulfill confidence. We're going to see other regulations come in for banking. For us at home, this is probably a good thing, because the regulations are likely to give us further protections. The CEO of Stanchart said that the regulation changes globally are likely to be profound as a result of Credit Suisse going down. So we need to keep an eye on what's going to happen there. What has also been unveiled about the operation of Credit Suisse before was that they have breached an agreement with the US. They obviously made an agreement with the US to disclose certain trusts that were happening offshore. Now, for anyone that doesn't know what onshore and offshore mean, just think of it literally. Onshore as in where you are living, where you operate, where you do your dealings, versus offshore in a different country where you have no control of regulation, particularly tax regulation. So what historically people have done is they've taken their money and they've put it into a trust offshore. So somewhere like the British Isles has been guilty of that. And we're talking about very, very wealthy people who have so much money but they don't want to pay tax on it, so they place it offshore. Credit Suisse have essentially been accused of having loads of customers put money in offshore accounts and not disclosing it to the US government. This has helped people avoid tax with the US. Not a good look. So one of the things people have been talking about is whether or not there's a banking crisis in the UK, and the short answer is no. There's not currently a banking crisis. There's been murmurs of it, and the Bank of England is really keeping an eye on it. But just to note, there's no real definition of banking crisis. The only thing is that people would, I suppose, expect it to be called a banking crisis if people weren't able to actually get hold of the money that they've deposited into the bank. Fair enough, that's obviously a banking crisis. That's not looking like it's going to be the case in England. England have really good schemes in place after the 2008 financial crisis. So we actually would get up to, I think it's about £85,000 per person if the bank was ever to go bankrupt. Ironic. So what this all means for law firms, especially if you work in the finance sector, you need to know what is going on. There's going to be a conversation with partners, etc., about the financial crisis, and you need to know. Okay, now my favourite topic, technology. So there's been a lot of talk recently about the media bill that's going through Parliament. So for anyone that doesn't know, a bill is essentially a draft piece of law. So what it will do is it gets drafted by the House of Commons. They go through it a couple of times, make sure they're happy with everything. It then passes to the House of Lords. House of Lords goes through it, make sure they're happy. And then it goes to the King, and he will stamp it and say, yes, we're happy with all of this. And then it is officially a piece of legislation. So at the moment it's in draft stage. That's what bill means. So one of the criticisms of law is that it's never really caught up with the modern world, and we can kind of see this here. So what the media bill is trying to do is to get streaming platforms like Disney Plus, Netflix, Amazon Prime under the same regulations as the radio and television channels in the UK. And when I say television channels, we've all used iPlayer, 4OD, things like that, they are under quite strict regulations about subtitles, audio descriptions, support for people with disabilities, and currently streaming platforms have none of those regulations, and that is all because the law hasn't caught up. So arguably this bill has been a long time coming. My understanding is that it got first brought up in Parliament 10 years ago. So the first draft is essentially saying that all those platforms will have to follow the same regulation as what radio stations and other platforms like iPlayer that I just discussed a minute ago, they have to follow the same rules. So another big reason for this is competition. As we've seen before, we know that the streaming platforms are pretty influential to us millennials. I don't know about you, but I pretty much stream everything nowadays. And they obviously have a competitive advantage because they don't have the same regulation and stringencies that BBC and Channel 4 etc. have. I suspect that it's also to push UK content and keep us as quite key players in the TV streaming world. We've obviously got kind of a cultural ties when it comes to the arts, particularly music, but also in television and radio, and make sure that our culture can be viewed globally. So what does this mean for law firms? This is particularly important if you're interested in media. You obviously need to keep an eye out for the bill. It would be so impressive in an assessment centre if you could start talking about bills and things that are kind of happening in that market area. If you're interviewing for a law firm, you want to make sure that you have an understanding of what their key sectors are. Most law firms, especially in the commercial world, are gonna be dealing with some regulation. So having an understanding that regulation and competition is an inherent part of business is really, really important.